Wall Street just launched its first ever crypto index, and Bitcoin isn't in it. The reasons they gave: Bitcoin doesn't generate revenue. Meanwhile, the AI trade that swallowed everybody's savings for 2 years is coming apart, and Warren Buffett's company is sitting on a record $397 billion in cash. Big money is waiting for something. But what are they waiting for? Because something shifted, and for the first time since 2009, money is no longer free. The great sorting has started, and the people running it looked at Bitcoin, checked it for revenue, found none, and left it out. So what did they miss? And why does the answer make Bitcoin's real market bigger than anything AI will ever earn? This is Truth Block. I'm Hurley. Let's mine truth. Quick favor before we dig in today. Most of you watching are still not subscribed, and that one tap is the best way to help out the channel. We appreciate you. All right, let's get into it. So S&P Dow Jones just launched a brand new benchmark with Pantera Capital. It contains a basket of 18 tokens and is aimed at translating to one trusted number for serious money to point at in regards to crypto, the way that the S&P 500 does for stocks. The 5 largest holdings are Ether, Binance Coin, Solana, Tron, and Hyperliquid, which I've never heard of. Bitcoin's not even in it. But before you write this off as another bunch of suits that don't get it, listen to how carefully Kathy Clay explains the criteria.
Yeah, so let's just admit that digital assets moves faster than equity assets, for example. But what we're trying to bring are the same sort of principles that we have in our equity indices into digital assets. So when you think about the seasoning period, the revenue generation, the listing requirement, the liquidity behind these different protocols for these tokens, these are the things that we think matter for serious investors and asset managers in the digital asset space. And so we think because there's this likeness between what we deliver in equity indices and into this new benchmark for digital assets, we think it'll make sense for the investing public.
But Bitcoin's not in here?
Bitcoin is not in there because it's really not one of those revenue generating protocols that we think belongs in this index. It meets all of the criteria, which there are many, in order for inclusion in this index.
Seasoning period, revenue generation, listing requirements, liquidity. Every one of those was built for answering a question about a business. And she's not sloppy. In that same interview with CNBC, she explained why the S&P refused to fast-track SpaceX into the S&P 500. The committee stuck to its methodology, and this morning, SpaceX hit an all-time low of $110. So the measurement didn't fail because somebody got careless. It failed because nobody asked whether Bitcoin is the kind of thing that ruler was built to measure. And the timing here is everything, because every asset on Earth is sitting in the same exam right now. James Lavish laid this out on Sunday's Informationist newsletter. There's one number underneath your mortgage, your portfolio, and every dollar Washington owes. It's what a lender genuinely earns after inflation for giving up a decade of purchasing power. Today, that number is 2.43%. Lavish calls it the rent on money. For 13 years straight, that number averaged 0.23%. Basically zero. So every asset, every story, every projection on Earth only had to clear a bar lying flat on the ground. Well, on Friday, it printed a 12-month high. And over that same stretch, the market's inflation forecast barely moved. This is the price of money itself going back to normal. So now everything you own has to answer one question for the first time since 2009. What does this pay me, measured against doing absolutely nothing? Gold, which has no earnings at all, already answered by falling 28% from its January peak. Bitcoin sits under the same math with a lot more hands on it. So Wall Street is sorting the entire world right now, and the tool it reaches for is cash flow. Jordy Visser has been right about this market repeatedly. Here he is describing what the money is actually doing.
I've been posting more and more the ecosystem index that I created of crypto. It took out the mid-June highs. Bitcoin did not take out the mid-June highs. Ethereum's been outperforming Bitcoin. All these things are suggesting that the market is starting to look more towards the revenue side of the equation, which would be more towards Ethereum and less towards Bitcoin. And that's a positive thing in the long run.
Visser's not making a mistake here. He's reporting one. He's telling you plainly what the flows say. Capital rotates toward whatever has a revenue line, and Bitcoin doesn't have one. And while the professionals argue about it, look at who's actually letting go of their coins. River's numbers for the second quarter show businesses adding 115,000 Bitcoin while individuals sold 78,000. That's regular people handing coins to balance sheets at the bottom of a bear market. And if you've ever been on the wrong side of that chart, you know it usually isn't a change of heart. It's a bill, which is exactly the problem Ledn was built to solve. Instead of selling your Bitcoin, with Ledn you borrow dollars against it, up to 50% of your stack's value, funded in under 6 hours. No credit checks, no capital gains event, at around half the rate of a credit card. But most importantly, your Bitcoin stays yours, and so does everything it does from here. So head to learn.ledn.io/simply and see how it all works. Now, the wrong ruler isn't only a Wall Street problem, because it's been picked up inside our own industry too. Fred Thiel runs Mara, the largest public Bitcoin miner in the world. He bought Bitcoin for the company balance sheet back in January of 2021. He holds it personally, and he says plainly that he's still a very big believer. He sat down with Natalie Brunell last week and said that he's not any less excited about it than he was 5 years ago, but he's just put it in a different box.
Gold as an asset class has been around for a long time. And there are periods of time where gold is super popular. There are periods of time where gold is less than popular. And we recently saw gold have its day in the sun as well.
Two worst performing assets this year, gold and Bitcoin.
So I think you have to look over the long period of time. But Bitcoin has a fundamental challenge as an asset, in that it doesn't produce yield. And so it is purely as a store of value, dependent on more people wanting to own it than people wanting to sell it. So it's a supply and demand asset. When Satoshi originally wrote the white paper, Bitcoin was designed as a currency.
And every word that Fred said there is true. Bitcoin doesn't produce yield. It's a supply and demand asset. And Satoshi did design it to be a currency. So why can't Bitcoin just become the money? Bitcoin would have been great as a clearing currency, but the legacy incumbents who control money and finance and the rules wouldn't let it in. And this is where it gets uncomfortable for everybody holding the ruler, because we've run this experiment before. Dave Cullum has been counting bubbles for 40 years. And here he is with Marty Bent this morning talking about the last time the smartest money on earth used revenue to decide what was worth owning.
So the people who somehow think that the revenue's like, oh my, how can you not own electricity? It's like the guys who bought the Nikkei in 1989. 14 of the 20 biggest companies in the world were in the Nikkei. How do you not own the Nikkei? You have to own the Nikkei under those conditions, right? Cisco in 1999 had a 30% growth in revenues.
Yeah.
So none of this stuff has anything to do with investing is the problem.
Cisco grew its revenue 30% in 1999 and then lost about 85% of its value. In 1989, the Nikkei held 14 of the 20 biggest companies on Earth, and Japan spent the next 30 years underwater. The revenue was real both times. It just told you nothing about what you were paying. Which brings us to the question nobody at S&P is asking out loud. Measured against what? Because a hurdle rate is a choice. Right now, opportunity cost gets calculated in a currency that has grown 279% in the United States since 2004 and 368% in Canada. So the ruler is quietly stretching underneath the thing you're measuring it with. Bitcoin's rules don't move like that. There will only ever be 21 million, and new supply is running at 0.8% a year and trending to zero. That's the real reason it doesn't fit in the index. It isn't a candidate to be measured. It's a candidate to become the thing you measure with. And once you start thinking about Bitcoin this way, all that matters is whether you hold it, which is why this show is brought to you by BitKey. I've watched people get everything right for years, and they get taken out by the boring stuff. A phone dies, or a backup ends up in the wrong box during a move. With BitKey, there's no seed phrase to lose, and the new device has a screen, so you can see exactly what you're approving before you approve it. Plus, with BitKey, recovery and inheritance are built right in, which means no subscription and no extra service. In my opinion, BitKey is the best Bitcoin wallet on the market for ease of use, rock-solid security, and peace of mind. So head to bitkey.world/truth and use promo code TRUTH for 10% off the new BitKey. Okay, so if Bitcoin isn't a business, then how big is the thing it's actually competing for? Jesse Myers ran the 2026 numbers, and every asset in the world adds up to about $1,127 trillion. Bonds account for $353 trillion of that. Equities are another $164 trillion. And money itself, the cash and deposits everybody actually holds is a whopping 141 trillion. Bitcoin is only 1.2 trillion. That's 0.11% of the world's assets. Now look at what Wall Street believes it's doing by leaving Bitcoin out of an equity-style index. It believes Bitcoin is fighting for the slice of that equity pile against companies with earnings. And that right there is a whole mistake, because money doesn't compete with equities. Money competes with money. The market for better money is the 141 trillion sitting in currency and the 353 trillion parked in bonds, because there was nowhere better to put it. Over the last 3 years, even with Bitcoin down 38% in the past 12 months, it's compounded at 44% a year. That's the highest number on the board. Gold did 34%, equities did 13%. The asset Wall Street just left out of its own index is the best performing asset class in the world, straight through its own bear market. So if the math is that clear, why does it feel like absolutely nothing is happening? Well, that's a timing question, and Michael Howell is the best person alive to answer it. Howell's firm tracks liquidity across 90 economies, and what he sees is a 5 to 6 year liquidity cycle, because the world's debt carries an average maturity of about that long. So everything has to be refinanced on that clock. By his math, it peaked at the end of Q3 last year, which is exactly when Bitcoin topped. Now that sounds bearish until you hear what he thinks happens on the way there.
And all this talk about, brave talk about the Federal Reserve balance sheet is going to be shrunk dramatically. I mean, dream on. There's no way they can do that.
Well, that's always the question I have. Like, with the debt problem is obviously ever growing. How do they ever get out of this? Do you think their plan is to inflate their way out of it? I can't see them ever defaulting. So, like, what other options do they have?
Well, they have no options. They can only inflate, because in a modern credit system, as I said, the paradox that you've got, if you look at this chart, I mean, basically, liquidity depends on debt. Okay, so liquidity, call that new credit, depends on debt, but that's old debt, right? So the debt that they're using as collateral is existing treasury debt for the most part. Okay, so you can't let defaults happen, because you're basically undermining your whole credit system. So if that's ruled out, all you can do is basically print money to devalue. That's what the Chinese are doing. But the thing that the issue I think we've got to get our heads around, or people have got to accept, is that the sort of debasement of debt, the great debasement, as people talk it, hasn't happened yet.
We've all spent 2 years acting like debasement is something we already lived through, and Bitcoin somehow failed to respond to it. Howell is saying the opposite. The West has been talking about debasement, and China is the only one actually doing it, quietly behind capital controls. And here's exactly one official answer to that problem. Scott Bessent sat in front of the Senate Finance Committee last month and said we have a growth problem and a spending problem. And his fix leans almost entirely on the first half of that. Just outrun the debt. That's his entire plan. So Danny asked Howell the obvious question, with AI as the only real catalyst on the table.
Do you think they've got any chance of growing themselves out of this debt? And obviously AI being the sort of only obvious catalyst.
No, I don't think they've got any chance at all. Because, you're in a situation where, growth, for the most part, I mean, I'm not going to discount AI and say that innovation and technology is not any good. But, the fact is that, a lot of growth is very demographically sensitive. And the growth rate of economies is really, at the end of the day, dependent upon young workforces.
Yeah.
And we don't have that.
No chance at all. That's the Treasury Secretary's only straight answer in 4 words by the man who counts the money. And his reason isn't political. It's just math. Which leaves us with the door he already named. They can only inflate. Which means all of this for you comes down to holding through it properly. So if your coins are still sitting on an exchange, or you built a self-custody plan once in 2021 and haven't touched it since, that's the gap the Bitcoin Way closes. The Bitcoin Way offers one-on-one, white-glove help from real human Bitcoin experts. Self-custody, hardware, node setup, inheritance planning, and locking down your security. No question is too basic for the Bitcoin Way. And your first 30-minute consultation is completely free when you visit thebitcoinway.com/Hurley. Okay, now let's zoom all the way out. Here's what the ruler can never see. Every bear market in Bitcoin's history has had a different story attached to it. And the floor has gone up every single time. In 2015, the bottom was $176. In 2018, it was $3,185. In 2022, it was $15,758. And the lowest close we've seen this year is $58,532. I'm not calling a bottom here, but that line has 4 data points and it only moves in one direction. And while the price sat down near those lows, long-term holder supply climbed to an all-time high of 14.85 million Bitcoin. That's the most coins ever held by people who refused to sell. At the exact moment, the market decided Bitcoin doesn't qualify for its own index. Because an index is a mirror. It doesn't tell you what an asset is worth. It tells you what the people who built it believe. And what S&P told you this week is that the most sophisticated capital allocators alive still have no category for money that nobody issues. Every dollar that eventually crosses that gap has to buy its coins from somebody holding them today. Gold spent 5,000 years as a thing the whole world measured against, and it never once had a revenue line. The dollar has no earnings either. No money in history has ever generated revenue, because generating revenue is what you do when you're trying to accumulate money. Bitcoin isn't trying to accumulate money. Bitcoin is money, and it's in the process of becoming recognized as the world's best money. So Wall Street built a ruler out of dollars and then used it to measure the one thing that can replace the dollar. Okay, now I want to hear from you. Is S&P leaving Bitcoin out of its own crypto index the most bullish signal of the year? Or is it just old money quietly protecting its turf? And if Bitcoin is really competing with $141 trillion in money and $353 trillion in bonds, what's a fair price for 0.11% of the world? Drop your answer in the comments below. And if this one gave you signal, give it a like and share it with someone who thinks Bitcoin has failed. And subscribe to Simply Bitcoin for more videos every day. Thanks for watching, and I'll see you on Thursday.